Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown, from his vacation house. How's it going,
That's right.
AJ?
I mean, it's 10 degrees warmer than expected, which I don't mind because down at the beach house, nobody's here. We're down here on the coast of South Carolina. We are kind of dealing with this tropical storm, Nicole, but it's just been some crazy rains, which are going to pass. Otherwise, it's been unseasonably warm. And this Saturday, we've got all you can eat oysters on the Marsh Walk. So I'm pretty stoked.
Hey, I'm a big fan of oysters. And talking about tropical storms, I feel like we're having a tropical storm in the market the last 2 days. A big drop, a big rally.
Yeah.
What are you seeing? What do you take away from everything that's going on?
I mean, we only got really 2 big pieces of information, don't we? We've got this thing called the midterm elections that still really haven't decided what's happening with the federal government yet. There's a whole bunch of called races in California, especially, and then a couple of around like Nevada is a big deal. Arizona is a big deal. Colorado's got a big deal. But then also the interesting thing about those midterm elections is how red New York went. New York is supposed to be this stronghold for the Democrats, and it went red. But all of that, it seemed like on Wednesday that was affecting the markets. But let me just tell you guys about my experience with the markets. What do the markets want? The markets want clear boundaries. Think about like any sport, Sip. When you have any sport, how do you win the game? You play right to the edge of the rules. Like if you're playing football, you'll always see those guys running right along the sideline to the point where they're kind of, could get out at a moment's notice. That to win the game, you play right to the edge of the rules, right? So it's so important for the market, right, to know what the rules are and who sets the rules. Well, it's kind of a combination, but mainly the rules in the markets are set by the federal government, right? And so one of the things that I've noticed over the years, and I've been doing this now coming up on 25 years, is that the market likes gridlock in the United States government, because gridlock means nothing is going to change, right? Investors like certainty, right? And so I don't think whether you're a red or a blue or a gray, I don't think that matters. I think what the market really cares about is not having the rules changing on them too much or having the rules change in their benefit. So I think they got a little bit confused. Investors got a little bit confused on Wednesday. But then on Thursday, we got the CPI data, which kind of recalibrated everybody off of this, game of whether it's red, blue, or gray, and focused on kind of what's important. And even though inflation, let's actually look at the CPI data because I got it right here. Consumer um, price index. And so, as you can see, it was a lot less than expected. Sadly, it was really a lot less than expected when you factor out food and energy. So, looking at food prices, they tend to still be going up. Energy prices tend to still be going up. That has a lot to do with what's happening in the world, especially with what's happening in the Ukraine. I mean, if you live in the Northeast, you're going to be paying like 1.5 to almost 1 3/4 the time for your heating oil this season. But when you take all of that kind of high variability stuff off the table, the CPI was a lot lower than expected. And that gives the market like some confidence that maybe the Fed is gonna kind of stop with their interest rate hikes and see, or maybe just reduce them, not have these 3/4 point rate hikes, and maybe take a pause and let it sink in, right? It seems like the Fed strategy is to go fast and hard and then get to a point where then they're going to pause for about 6 months. So at what level that is, it kind of depends on the data. So this data kind of gave people the idea that the Fed may get closer to that pausing point and leave us alone for 6 months, right?
Yeah, I mean, looking at that chart, I'm seeing that huge gap up, right? And that
Yep.
you very rarely do you see gap ups that strong, and then
Yep.
in addition to that, the follow through. So that was really yesterday, right? That was
That was
all
yesterday. And then we
all.
had a little bit of a gap up today.
So it seems as if the continuation off of these bottoms are catching a little bit of steam. And at least what I was reading is that this news, we're going to have another CPI print next month, right
Mhm.
before the next Fed hike. So, or the Fed rate decision. And so, what the pundits are saying is that if we see the continuation of improvement in the CPI number, then maybe they'll go 50 basis points and not 75,
Or
and
even a
that may,
quarter.
yeah, and that may be the, that fast fast act and then pause, going into the holidays. I mean, that might be a nice little way to head into the new year, but we'll see.
Well, and
um
also, let's talk technicals. Can we talk technicals a second
of
here?
course, that's why I was bringing up the gap up, because you never
Y
see it to the upside like that, or it's
Well, and
rare, it's rare.
what we wanna know is, like, is this a real bottom? Because if this is a real bottom, we can and I'm gonna bring up my magic marker here. I forgot to load it before we started. But, if we have a bottom here, people can start getting back into investing, right, instead of selling off. And so the question is this bottom that we saw on October 12th, is that a real bottom? And so what I like to do for you technicians out there is I like to measure my retracements. So this retracement right here, and my marker just showed up here. I'm going to do some drawing on the screen for you. This retracement right here was much more than this retracement right here, which tells us that might not not 100%, but that might be the beginning of an uptrend. In fact, not only was it more than this retracement, it was more than 125% of this previous retracement. So that's great, right? That's a good first move. But then we take a look at this next move. This is what we call a contraction move, SIP. And when we have a contraction move, we expect them on any sort of uptrend or downtrend. We expect the market to take a few days of a break. On this contraction move, we went to about halfway. And that's also what I consider an ideal retraction move. And now take a look. I've got my measuring here, my measuring ruler here. We've already, again, following the same kind of pattern on the first move, we already surpassed 125% on this current move. And so those are the three moves we need in order to consider ourselves not only ideal for an uptrend, but this is the mature, because now with three moves, check this out. I'm going to draw here. We've got 2 points at the bottom, which are tested levels of ascending support. And now we have 2 tests at the top for ascending level of resistance. We now have set up a channel that people can start putting some confidence in for trending up. So I'm getting very confident about this current uptrend. Now, the biggest test is going to be if there's people out there who like to watch these lagging indicators called moving averages. And so if I pull up the more traditional moving averages, first of all, notice this purple line right here. This purple line is what we call the 50-day moving average. And this 50-day moving average, even though it's kind of trending down, prices have moved above it, which means it's going to get started to pull up. It's going to take about a week or two, but we're going to start seeing it move back up. And then this guy is what we call our 200-day simple moving average. We haven't gotten above it yet with price, so it's still trying to want to get pulled down towards price. But if price goes above it, it's going to start feeling the effects. Now, it is such a slow mover. It takes about a month or so of price above it for it to kind of relax. But the key is investors all across the world like to watch if the 50-day crosses the 200-day. That's what they call a golden cross. And when you see a golden cross, I mean, money starts flowing back into the stock market hand over fist. So that would be a lagging indicator. The question is can we determine if it's an uptrend before then? And we're on our way. I would say that a lot of my friend folks are starting to call the market somewhat like neutral, if not verging. And I dare to say it because you never know what the Fed's going to do in December, but neutral bullish.
Yeah, and looking at the sell-off on Wednesday, I believe that was primarily triggered by
Yeah.
liquidity and the crypto market and one of the big major
Well,
exchanges coming down, and I think that was it created a lot of uncertainty. And I know we'll touch on crypto later, but that did
mhm.
have an effect on leading up into the. It's like everything was falling. The CPA number came out, and everyone, decided that that's a better indicator of the market. And
I keep talking about this because everybody focuses on Fed interest rates. When you turn on the TV and you turn on, ABC, the mainstream markets, they're all talking about the interest rates because the interest rates affect us as average people of the US, right? It affects how easy it is for us to get money to do things like buy cars, buy things on credit, buy houses. All of that is done by the interest rate. But investors and the overall market need to pay attention to this other tool that the Fed has employed. And I keep hammering it because we are investors and because this doesn't make the news headlines as often. And this is that bond buying and selling. So the Fed had done all this bond buying until about April of this year. And now they're on this accelerating pace, and it's accelerating pace to sell those bonds. Now, they want to target about a $95 billion, almost $100 billion of selling of the bonds that they bought. Now, different than any customer out there who buys and sells bonds, the Fed buys bonds with made up money. And then when they sell bonds, they destroy that money. They destroy that liquidity. In the meantime, when they sell those bonds, right, and take that money out of the market and basically shred it, they're making bonds actually go up in value, meaning you can invest in bonds. This is like the first time in 20 years that you can put money into bonds and expect like a pretty healthy freaking return. And so people are taking their money out of every other kind of like risky asset that before this, when bonds were worth nothing, it was like, what do I do with my money to make money? Well, let's put a little bit into this thing called crypto, or let's put a little bit into this thing called REITs or SPACs or some of these really kind of crazy off the wall investments because there was nothing else to do to make money. Well, now the Fed is totally moving this target back to bonds and back to stocks that are more like, safety stocks, like companies like Hershey and General Motors and General Electric and companies that have been around for forever, and more like exciting companies like your tech stocks or, things like assets like crypto and stuff. We're seeing money come out of them. And then those people who were, a couple months ago, diehard crypto people, they're like, oh shit, all of my value is going out. I should probably start selling too. And so it's creating this spin. We've heard of this FTX. It's all over, not even just financial news networks. I saw it here in South Carolina on freaking ABC this morning. They're talking about FTX having a liquidity crunch, right? That's one of those crypto exchanges. And one of the problems is in a lot of these other mainstream investments, we have government protections because the government put rules around it. Crypto has no government protections. And so I know that there was the other exchange that was being tapped on the shoulder and saying, could you bail out FTX? And the other exchange was like, We're fine on our own, thank you. And so all those people who have been using FTX could potentially, lose their investment, and it's kind
Yeah,
of
I just
scary.
just this morning's headline is they filed for bankruptcy, and you're right, because they're a crypto exchange.
No
Don't have a
safeguard.
lot of the same safety, right? That's the risk of crypto, and there's a few players that um, are getting closer, right, to having some oversight. But I think the biggest issue here was that they had their own coin, and a lot of their own value was derived from their own coin. And
Mhm.
then when Binance came in and they said, well, we don't want anything to do with this, we're selling all of our stake in this
Yeah.
coin, everybody
Yeah.
went with it. And so that's interesting. Okay, well, we're going to get into crypto a
Even
little bit
more.
even more in the segment. I think we've got a nice little let's just touch on the car repossessions real quick, right?
I
Because it
gotta
kind of, yeah, we
I
talked about
gotta
it
bring it up because
a few
we
weeks
talked
ago.
about it a few weeks ago, right?
Yeah.
It's going up. So actually for every about I think it's about 2.4 cars that are sold at this moment in time, one car that's on the road is being repoed. I think there's something like 4 cars per second that are being repoed. So I brought this up about a month ago, maybe even more. I think I brought it up over the summer, but you know, a lot of these car companies have moved their focus. They're making more profit in financing cars than they are in actually selling cars. So the financing, if you go to buy a car right now, the financing the options to finance this thing have gotten quite extreme. I mean, they have really taken a jump into the financing. In fact, not only has there been an increase in the number of choices of ways to finance a car, it seems like now, before, like when I was younger, 3 years was the max car loan. I think now it's like 7 or 8 years. You know, match that craziness with the fact that cars are at an all-time high. I mean, it's still, despite the supply chain eases that are happening. I mean, just on a side note, if you're in the market for any sort of computer this holiday season, you're going to get the discount of your life, because they've been overproducing very complex CPUs, very complex memory for those type of computers. And it seems like people during the pandemic bought all the computers they need to have their home office, and now some of them are actually even going back to the office. So there's a glut of these complex chips on the market, and so expect to get great deals on home computers and laptops and stuff this Christmas. But it seems like the specialized chips that are needed for making new cars, especially electric cars, but even the regular cars, there's still a supply shortage of that. So cars are going for a lot of money right now. And what we expect to have happen, the same with personal computers, is that all of a sudden supply is going to catch up with demand, and it's going to surpass it, because that's usually what happens. There's two graphs, and right now supply is down here and demand is up here. It's going to go where there's too much supply, which means prices are going to drop. And those people who paid top dollar and financed it, we're already seeing it. Repos are on the rise. They're not going to be able to afford their payment, and in addition, they're not going to want to afford their payment, because the car's not going to be worth anything. And so one ticker sip that this is a penny stock, so it's not really in our purview for option trading, but it's REPO. This is a company that is public, that is national, and they're actually involved in repossession. So I'm watching this penny stock. Right now, they're about 4 pennies. Over the summer, they got up as high as about 8 pennies. But let's watch REPO, because I have a feeling in the next year, this company is going to shoot through the roof. They're doing fantastic as a company. I know you've got a platform on your computer from Madison that you can look up some of the statistics, but this company seems to be doing very well in repossessing cars.
Yeah, there's not enough data to really give insight, but you're right. This is as penny of a penny stock as you get. And I know we never talk about penny stocks, but hey, I think you're definitely on to something in terms of they're going to be getting more business in the coming months.
Yeah, and pickup truck owners, the Ford F-150, the Chevy Silverado is the most repossessed truck, and then those people who get themselves these like little beaters like Honda Civics and Honda's Accords, those are the next most repossessed. So, dudes, wait for the crash in car prices if you want to go buy a car. Just like this winter is going to be the good time to buy a personal computer. If you can hold off, if you can keep that current car going for a little while and you want to get a nice new one, maybe next summer or next fall, be perfect timing.
Totally. So we'll definitely keep an eye on that. If you want to see the video from our previous show about the auto repossession industry and what's going on there, feel free to jump on our YouTube. If you're watching, listening for the first time and you're interested in learning more about AJ and trading trainer, the program, everything that goes into it, I just threw a link to the free daily workshop in the chat. So if you have time later today or this weekend, head on over there, sign up, and AJ will give you a nice little presentation on his approach, his strategies, and the things that he does to generate income, like a monthly paycheck parade, like you see on the screen. So we got more to talk about in the show. We're going to take a break here for a second. We'll be back. And if you have any tickers or symbols that you want us to run through, feel free to drop it in the chat. And when we go through our speed round, we will do our best to run through it. So sit tight and we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So that webinar is getting a lot of action lately, isn't it?
Oh my God, so much traction. We've got our automated chat bots that are registering people left and right. And so, yeah, we're actually going to be updating that webinar over the weekend with the latest examples. So I'm kind of excited. Yeah, it's getting a ton of traction.
Yeah, once again, the link is in the chat. Head on over there, sign up today, sign up for the weekend at your leisure. We are here to teach you about investing and ways to get involved in the markets if you haven't already been doing so. All right, moving on to our next segment, trending topics. And I think the one is what we were just talking about, and that's the crypto industry, right? We talked about FTX, a fairly large crypto brokerage. I think their highest valuation was like $32 billion, right? Coming crashing down in about 3 days. And Dave Portnoy, which I don't know if you know who that is, but he's the guy that does Barstool Sports. He did a whole video where he's like, well, someone explain to me why I can't get my money out. Like, I thought this was Bitcoin and Bitcoin can be transferred. And like people had to explain to him that it's an exchange, right? And so you're not really owning the asset. You're just using the tool to trade it. And so there was a run on the exchange. And the question today is crypto dead? AJ, what do you think?
I don't think crypto is dead, but I think that crypto has to be reinvented. I'm pretty sure that there's going to be, just like there's rules on the marketplace for stocks, commodities, currencies, all the things that are traded on the big exchanges. I think that there's got to be some oversight on the crypto market before people feel the comfort about being in there. There's a big problem that a lot of folks you'll hear say, it's not based on anything. It's just based on sentiment, right? But that's what a lot of the currencies on these various countries, if you think about it, are based on. They're not based on anything either, except for the reputation of the country that the currency is used in. So, crypto doesn't have to be country based. It's crypto based, whether it's Bitcoin. I think a lot of the smaller coins, like what was the one that Elon, Dogecoin, I think a lot of the smaller coins might dissolve. But I mean, I'm still doing some mining at my house. My crypto servers have totally paid themselves off, and I'll tell you what I use them for most. I use them for more. I use them mostly to heat my home. So in the wintertime, I plug these things in different rooms, and it's like having an 800-watt heater. So for those of you out there who use like a little portable 800-watt electric heaters in different rooms in your house, maybe you want to buy a used crypto miner, and you just use something like NiceHash or something, and they take care of all the algorithms for you, and you get a little bit of money back, plus you heat your house. But this might be the best time, Sip, for people to be thinking about getting into crypto. What do you think? You're a crypto guy, right?
Yeah, I mean, I think if someone has never transferred crypto from one wallet to another, or actually,
Difficult.
if you haven't done that, you don't understand the power. But as soon as you transfer it, right? Like I'm a big fan of Litecoin, right?
Okay.
Litecoin to me is one of the cheaper transactional coins, meaning that if I'm gonna send you, AJ, 100 Litecoins, it's gonna cost me like 14 cents, right? And when you look at that, when you're doing a bank wire or transfers like that, the fees start to add up. And so to me, that's what I like crypto for the most, is to actually be able to move it. And I think that's what it's actually, what its strongest value is. And in addition to that, there's this ledger, right? So the ledger is powerful in the sense that we see everything that's going on, and that's why there's people that follow these ledgers, and they'll say like there's a Bitcoin whale moving this and that, and that transparency is valuable. That transparency is something that can live on for the next 10, 20, 30, 40, 50 years. And so I think you're right. If you are going to be investing, this may be a good time, but you should understand why you're investing in one coin over another, because there are going to be a lot of these that fade out, like what happened with FTX. So I'm a big fan of Litecoin. I'm a big fan of crypto.com, right? Crypto.com has their own coin, CRO, big fan of that. I think Ethereum has potential, Bitcoin obviously. So sprinkling it in, understanding the differences between exchanges, and having it on, like a drive or a stick of some sort. And just picking and choosing your battles, right? So you can hold the raw asset, you can invest in names like Coinbase, like we talked about last week. So there's life to it, in my opinion. You just have to be smart about it.
Yeah. I think that federal oversight, government oversight is going to be very useful. I think there's so much dollars at this time invested in the infrastructure that supports crypto that people are not going to abandon this investment in it. So I don't think that it's dead, but I think that it's going to get reinvented. And this might be the time that instead of fleeing from crypto, you consider buying it at bargain basement prices.
Yeah, and when you see those 20% drops, maybe pick up a few coins here or there,
Mhm.
and let it build up over time. All
And I
right.
like the idea of using Litecoin as I use Venmo and PayPal, but you're right. When I get hit with those fees, I mean, PayPal, it's like 3% of the transaction or 2% of the transaction. I mean, if it's Litecoin is just a 14-cent transaction and I can have that transparency instead of having, MasterCard, Visa, well, how are they keeping my privacy? How are they making sure that the ledger stays legit? I don't know.
Yeah, so we'll keep an eye
Power of
on
the
it.
blockchain.
Yeah, I think the consensus here is we're both pro crypto, so we're gonna pick and choose our investments. All right, let's move on to some opportunities and some trades. So in this segment, we're gonna go ahead and go over AJ's pick of the week, and then we're gonna run through our speed round of names and tickers that people have been asking about this week. Our first uh, or AJ's pick of the week this week is Fisker, ticker symbol FSR. I'm not sure what this company does.
Oh, dude. In fact, I'm so bummed. You know how a couple of months ago we were right there in Los Angeles with you. We did our first live show where we were in the same room. Fisker is an electric car maker. And I think I visited while I was there the Grove, kind of a mall, outdoor mall place that also has like really high end. I swear, just walking down through the streets of this Grove area, I saw so many people creating Instagram reels and TikToks. It was out of control. Like there, I know my wife went into a high end boutique and bought some dresses and stuff. They just opened up the first Fisker auto outlet at the Grove, and I've been dying to check out. They have a new car that they've created called the Ocean that is back ordered, and they're also doing tours across the United States. I think they just did Seattle and Austin and Houston, and they're in Dallas. I can't wait till they come to the East Coast because I'm going to check out the Fisker Ocean. But this car looks like a major competitor to Tesla, and my wife likes it because you can press one button and all the windows go down and the top comes down, and it becomes kind of a cool, like California, like convertible type car. But that's kind of why I'm just like this enthusiast to the movement to these electric cars, even though I love my muscle cars, and the electric cars don't have that like grumble and stuff. But man, they do kind of zip around, and for like a street beater, I'd be all over it. And I've been waiting to like test drive this Fisker Ocean. So I'm interested in the company itself. And so I was looking at the chart this morning, and I was thinking, man, this chart is setting up as a great candidate for making income on. But also, if I just wanted to support the company and own the stock, how about doing what we call naked puts on them? So two different discussions here. So let's first talk about making income on it. Why do I think it's a good company for making income? Because it seems to have developed into a sideways channel between about $6.50, $6.75, and $8.25. That's the tested resistance and tested support. Now, this is a new sideways channel. And so we could definitely set up an initial position, whether it be at the top or the bottom of the channel. If it's at the top of the channel, I'd want to either short some Fisker stock or buy some back month deep in the money put options. If it's at the bottom of the channel, I'd either want to buy some Fisker stock or buy some deep in the money far out in time calls. And then as it alternates between support and resistance, I can do what I've been talking about on this show, as well as talking about and teach about in that complimentary webinar we mentioned earlier, where once it gets to the opposite level, I would sell premium and buy protection. And then once it gets back to the original level, sell that premium back, or buy to close that premium and sell that protection back, and just create an income stream month in, month out from this Fisker stock. But then the other strategy, Sip, is if I want to own some of this stock, a lot of people are like, I want to own stock. I'm just going to buy the stock. But what the options allow you to do is create some certainty. So let's take a look at the option chain really quick, because I'm really excited about this company and I'm really excited about Fisker stock. If I take a look at the option chain, so this option expires next Friday, Friday the 18th. And say, for instance, I'd be willing to pay $7.50 for a share of stock. Right now it's trading at about $8.10. So say, for instance, I say, I'll gladly pay $7.50. I could sell this naked put so long as I have $7.50 per share. And don't forget, options are traded in lots of 100. So I need to have $750 because I'm going to be buying 100 shares of stock if it comes down. I could today, right now, sell this and make 20 cents per share, right? Get 20 cents per share. And should the stock come into that 750 range, then I'll pay that 750, right? That transaction will happen automatically. And so instead of paying 750, I'd actually be paying 730 because I just got 20 cents. And if it doesn't come in that range and people don't decide to, exercise that put option that I sold, then I get to keep the 20 cents per share and do it again next month for the December expiration. So this is a great way to buy stock because you get to lock in the exact price you want to pay for it. And if you don't get the stock by the time that the option expires, you at least get that consolation prize. In my case, 20 cents a share, or, 20 cents a share times $120. So for every time that I don't get the stock, I get $20. So either I'm going to get the stock at the price I want to pay, that's certainty, or I get the $20 consolation prize. So I'm all over doing naked puts if you want to own the stock.
Yeah, and it's priced fairly well at $8. I just pulled up a picture of the car. I mean, spot on. They look aesthetically like they can compete with the other manufacturers. So I definitely think this is a player. I
And
was just
Fisker wants to compete against Tesla also on the whole full self-driving thing, which a lot of the other cars, like, the BMW and the ones that are from traditional car makers, they're kind of focusing on just the electric car aspect of their gas-powered, older brothers. But Fisker being a car from the start, and where they're differentiating themselves from Tesla is their technology. You can tell I'm a nerd about this. Their technology is about the LiDAR. So in addition to having cameras around the car, Elon's been all about like LiDAR sucks. We're just going to look at cameras. And then all these Teslas are like hitting trucks and shit. This particular car also, in addition to radar, uses LiDAR. And so I'm all about that for moving ahead with the whole full self-driving type cars. I had to
yeah,
plug
and
it. I had to plug
yeah,
it, dude.
hey, I might have to Google or look into what LiDAR means, but I just looked at the analyst forecasts, right? Low end is $8 where we're at now. High end is 28. So it's got some room to the upside, and it looks like fundamentally they're just getting the wheels turning in terms of
Mhm.
generating sales and opening a new showroom in a very classy part of the country. Should start to help them compete. So
Yeah.
we'll keep an eye on Fisker
Fisker.
Automotive. All right. So before we head into the speed round, we want to let everybody know that in addition to the daily workshop that is available in the link that we just threw up there, AJ also has been taking on members to coach and teach trading one-on-one. So if you're more of a person that likes to learn personally with
Hands-on.
someone, hands-on, ask questions, I'm going to go ahead and throw the link to the one-on-one chat or the one-on-one session into the chat. And if you want to, if you have questions, if you want to learn more about, what the programming looks like, what the schedule looks like, what you get, feel free to schedule an appointment with somebody. Our rep is going to, or a number of reps at this point, I can't keep track anymore, is going to walk you through the whole process. So head on over to the link, schedule an appointment, and let AJ and the team show you, what one-on-one trading education looks like. So we're going to go ahead through. How's that going? Any recent feedback?
Well, yeah, we've got quite a few people who, so our this coaching program is quite unique, and that is we have we're not just doing like weekly sessions. We start off with weekly sessions where we make sure you have all the basics, all the fundamentals in place. But then after that's done and we know that we've basically downloaded our knowledge to you, we want to make sure we lock it in, right? And so what we're going to do is we're actually going to trade with you for 6 months. That means we're going to meet with you either right after every session or right before every session so that we can prepare you for the next trading session. And we're going to make sure all that stuff we taught you in the first weeks you use, and we take it from just being something to something that you have experience, create that muscle memory, and we're going to make sure you make your money back. And so we're getting ready to have a whole bunch of people join our Trade With Us program, part of the overall coaching, and people are just loving it. And so, Yeah, and people have been asking me, "Why can't I just buy in? Why do I have to talk to somebody?" And the reason is because you're gonna be trading with us in kind of a group of, like, 30, 40 people, a small group where everybody can look over their shoulder and leverage ideas. We wanna make sure you're a fit. So, it's kind of you talk to us, and it's kind of making sure you're gonna like what you get, but also we're gonna like what we get by having you join our program. So we ask you to talk to somebody and they kind of suss it out to see if it's the right fit for both of us. So that's why you're talking to somebody. So come prepared, no obligation discussion, but come prepared with a bunch of questions so we can make sure your questions are answered as well as ours.
Awesome. The link to that is in the chat. Head on over there, schedule some time to talk, get your answers or get the answers to your questions, and let's get everybody trading and investing successfully. Okay. Moving on to the most exciting part of the show, and that is our speed round.
round.
All week, basically, we've got members, we got a bunch of social channels, people are dropping their questions, and these are the juicy ones for this week. So, starting off our speed round today is a company by the name of Mosaic, ticker symbol MOS, and this is lovely fellow or lady Styles from Orlando, Florida. Mosaic.
Okay, so Mosaic. And can you hear me okay? Because your voice was kind of going in and out with the music. So just want to make sure that you can hear me okay.
Yep, we can hear you.
Okay, cool. So Mosaic, I guess Mosaic is the fertilizer company. They've got, and it's funny you say Orlando because they get a lot of their, I think it's their potash for fertilizers out of Central Florida. They get a lot of another stuff, I think, out of like Canada, out of Saskatchewan or something. But then they ship this stuff all over the world. This is like what grows our food. Looking at it technically, yeah, this thing seems to be, they give a dividend, which is nice. This thing does seem to be going sideways. Let me go ahead out a little bit. 1 year. So they had a little bit of some undulation, but now they seem to be in some sideways channel between about $47, $48 and about $54. The only thing that worries me a little bit about Mosaic as far as turning it into an income trade is some of this gapping that I'm seeing here. So you can see that it was up here at resistance, and within 1 day, it came down to support. And so what we like to do is try to do our various trades in our income generating process at the opposite sides of the channel. And the question would be, how comfortable would we be with determining this is when we should have been doing that and this is when we should have been doing that? It looks like we'd get some confusion. Like by the time we were sure we weren't going to go any farther down, it might reverse on us and already be up at resistance. So that's my only worry. But look at how much they're making in earnings. In addition to giving us positive dividends, returning money back to the investor, look at how much they're making in their earnings. This is like one of those companies that we talked about, like a defensive company, a company that actually does something and makes money at it. They've got positive cash flow. Another thing you might consider, especially because of those strong fundamentals, is using that naked put strategy that I talked about with Fisker and adding some of this to your long-term portfolio, because you can't go wrong with having actual solid producing companies that are making stuff and making money, right? So if you wanted to do that, let's actually take a look at the option chain. If you wanted to do that, it looks like there's plenty of options to sell. You could lock in your price at $50. If you were to lock in your price at $50, you'd be getting roughly about 75 cents a share right now. And if by the time next Friday rolls around, if you don't get your $50 sale price, buy price, then you get to keep that 75 cents a share as a bonus, and you just keep doing it until you get the price you want to pay for this thing. So I like it. I'm not sure it's the easiest to sell income against, but it might be one you want to add to your personal portfolio using that naked put strategy.
Yeah, and I just want to bring up one stat real quick. Their sales is growing phenomenally, right? The quarter over quarter, they're up 11% at $18 billion. So to your point that they're a solid company doing, solid stuff is spot on. So
I think
uh
if you think about it from the headline perspective, I think there's been a huge gap. And whenever there's a huge gap in the market, there's a huge gap in the grain market because of what's happening in the Ukraine, right? And so it actually, whenever there's a gap, it means that people start to rush in different places in the world. And so I actually, know for a fact that there's a lot of people who are transitioning from corn to the grains that are grown in the Ukraine right here in the United States for the next crop. And so, in order to enrich their lands, in order to grow these different grains, fertilizer is going to be where it's at.
Totally. All right. So thank you, Styles from Florida. Moving on
Styles.
to our Styles. Moving on to our next ticker. This is Jim from Monterey, California, and he's interested in a name I believe we've discussed here and there, and that's ChargePoint.
Oh, yeah.
Ticker symbol CHPT. I believe they are the charging state, the electric vehicle charging station manufacturer, distributor.
Yeah. Okay. Yeah, we looked at them, and then it looks like they did a step function decrease in price. It looks like over here they had once tested about $11.50. It looks like they're testing that again. So a lot of times when I turn something into an income generating, I like to see, a solid sideways channel. So 2 tests of support, 2 tests of resistance. If you count this 2 tests of support, and that could totally be argued because it looks like it's a descending level of support. But assuming you test these 2 levels of support, here's a little tip for you guys who really want to get into an income trade before waiting for 2 tests of resistance. Number one, the trade may be short-lived because you haven't waited for it to be matured. But number two, you could still do it because our trades are self-adjusting, meaning if we go ahead at this bottom, and it looks like I'm getting a signal today that my indicators think that there's a bottom being found. So Monday might be an opportunity to buy into this. If I get into a bottom, then if the symbol decides to keep going up and doesn't reverse, that's fine. My initial position becomes a directional position, and I'm going to just close it when it hits its next top and take that profit and run. And that's a great directional position. So income positions can easily adjust, and most of the time self-adjust, meaning you don't actually have to be present during the trading session to make it happen. So yeah, I think that ChargePoint still, and we talked about it like Sip said a few weeks or a month ago, I think it's still a good symbol. We just have to adjust our levels of support and resistance.
Yeah, and in terms of our appreciation for the electric car industry, this is one that's going to be right in line because as more electric cars come out, there's going to be the need to charge them. And looking at their fundamentals quarter over quarter, their sales are up 18%. So they are getting after it on their end. So definitely we'll keep an eye on ChargePoint. So thank you for that, Jim. Moving on to our next ticker symbol. This is Dinesh from Nashua, New Hampshire, and he's interested in Toast. Ticker symbol TOST.
Nassau. Yeah, okay. I like Toast. Trading in a nice price range for us. It looks like it's established our level of support somewhere around $18. It looks like it's established its level of resistance around $22. Around this earnings season, it seems to have moved very quick from support to resistance. But in other times, well, it seems to jump between support and resistance quite quickly, which might mean missed opportunities for selling income, or maybe we don't want to be using our usual technicals. Maybe we want to use something like quantitative data. Quantitative data means you basically look at NASDAQ level 4 data, and you figure out where the support and resistance is based on how many pent up trades are ready to go. So, for instance, at $17, if you look at your NASDAQ 4 level and you see a whole bunch of people with limit buy orders, you know that $17 is going to be your level of support, because as soon as it hits that, all those limit buy orders are going to hit, and it's going to cause the stock price to go back up. So you can kind of cheat using that, and a lot of actual fund traders look at that data. That they predominantly look at that data, and so you might be able to make this work. I think what kind of company is this, Sip? What do you see fundamental wise?
Well, you know what Toast is, right? So when you go into the restaurants and you're about to pay, it's the little POS system that they'll like flip over, right? And so that's a pretty good business to be in. Fundamentally, I think they're about flatlined, or actually, quarter over quarter, they're having strong sales too of 12%. So I guess it's
flatline is good for us option traders.
Yeah, low end $19, high end $29. So, yeah, flatline is probably how I would characterize it.
And they're trading every dollar, so it's a pretty healthy. It looks pretty healthy as an option market. Interestingly enough, you can see here that they've got options trading at the traditional $2.50 increment, and then they've got these dollar increments. What that means is that the options are traded on different exchanges that operate on different rules. As far as we're concerned, it doesn't matter, because our brokerages trade on all those exchanges. So if you want to do these increments, you'll go to the one exchange, or these other increments, you go to the other exchange. But you'll notice that on the $2.50 increment, we've got quite higher liquidity, meaning there's more traders on those other exchanges than on the dollar exchange. That's just some tidbits of information for you, that we get involved with all those discussions, because it does affect your trading a little bit in our program. So those of you that watch that webinar, or watch that webinar again and get some of the high points of selling premium, and you decide to join our program, we'll give you those nuances about what all that means. I just want to kind of whet your palate with that.
All right. And once again, the links to that are in the chat. We do have a quick, a few live user questions. And I think this one is one we could bring up because we've talked about it, and that's the silver trade, the SLV. Right. I think the question here is, when you sold the put, do you buy the put for protection or place a stop loss? So I think the question is, how do you bracket the trade here?
Oh yeah. So if you shorted this, right? I think that's the answer. So you basically either shorted the SLV, probably back here at some point. You either shorted it, or you bought deep in the money, far out in time put options. And then down here is where you sold your put premium and you buy a protective call. And the protective call strike price is going to be somewhere up here, because you just need it for if this thing kind of works against your initial position. In the meantime, that protective call will also act as an out of the money directional trade, which will profit you big time if you never have to use it as protection. So it's sell the put premium, use that money to offset the protective call purchase, and now you're looking for that opportunity to roll out that protective call. So that's kind of where we're going with this, if I understand kind of your layout of SLV and how you set up that income trade. But it looks like it's working just the way you wanted it to.
All right. Well, if I think the user there is Mariah. Mariah, if you have more questions, feel free to send the DM, and AJ or someone will get you a more specific answer.
Yeah.
All right.
I love that. I love this silver ETF, by the way. This is a great way to get involved with the silver trade. And silver has always been a great one to create income off of using options.
Totally. Okay. Mariah, thank you for the question there. We'll move into our very last question of the segment. And this is one that I think a lot of people think about, or they ask themselves if they're busy, if they're entrepreneurs, if they're business owners, if they're in school. And that is, how do you trade when you are involved in these activities? How do you trade if you have to go to school at 8 a.m. and you get out at 3, or you have a day job? I think just your strategies and the way that you approach the market are the answer. But what would you say to somebody who's busy, who wants to trade? How do they go about doing it?
Well, okay, so traditionally the scoop is that's the whole thing behind amateur hour. So the first hour of trading is typically, and that's why it got the nickname amateur hour, is typically people who want to be involved, but they have to go, live life. I'm actually not, I use amateur hour if I want to get kind of a dream price, because there's always so much volatility in the market during amateur hour. But this is where I recommend a couple of things. Number one is, and it's the way I do most of my trading, end of day trading. So I actually look for my signals at the end of the day after the market's closed. And if I get that signal, my next step is to build confidence, because usually the way I get that signal is usually with one or two indicators in combination. But indicators look at the trading in just one way, right? So I'll look at other indicators to create validation, to build confidence in my signals, so that I'm not just trusting one view of the market. So, and put into exact specifics, if I'm using, for instance, the fast MACD to tell me whether there's a top reversal or a bottom reversal, then before I trust that fast MACD signal at end of day, I'll look at things like volume validation. I'll look at bar patterns. I'll look at price patterns. I'll look at quantitative data. I'll look at all of that stuff just to make sure I feel good about that signal. And if I do, then the next day when I'm in school or something, most of the trading platforms, and this is wonderful, by the way, most of the trading platforms have basic automation built in, meaning you can do limit orders that don't start until a certain time during the trading session, but embrace automation, right? Set yourself up with rules that you set up either the night before or the morning, that this has to be seen during the market for me to open the position or close the position. And one of my favorites is just making sure the symbol is going in the direction I want it to. I like to wait until the afternoon, because it's that amateur hour I don't want to be trading in. And the morning session, when economic news is being released, I'm not interested in trading during those sessions. So in the afternoon session, I'll make sure that it's in the afternoon, that I'm going to hit my price, whatever my price target is for a symbol, and that the symbol is going in the direction. If it's coming off of a bottom reversal, I want to see that the symbol is higher than yesterday's close and maybe higher than today's open range. Or if it's off of a top, I want to make sure I'm lower than yesterday's close and lower than today's open range. It's just some basics like that. Most trading platforms will allow you to use what's called conditional trading to do that. And so you can automate that. And if you've got even more complex trading platforms like a TradeStation or TradeThirsty, or even into the Thinkorswim, you can actually get, deeper into this automation. I'm all about embracing automation. One, because you don't have to be there, but two, because it takes your emotions out of it. You program black and white rules into the trading platform, and you can do that without the market being open, without being influenced by seeing the price go up and down and getting excited and FOMO and all those emotions that come in when you get involved in a live market. When you're sane, you create these black and white rules and then let the automation take care of it. It takes your emotions out of the equation. You just come back at the end of every day and see what positions either opened or closed and which ones were left unfilled. I love that. And I've been doing that for years. Even before automation, I would hire other people, right? I would actually hire staff to do my rules that I determined out of hours do it for me so that I wouldn't get influenced by all the like craziness, because I kind of have some hot Italian blood floating in me, and I kind of F things up when I'm involved myself. Same thing with a casino. The minute I hear like bells and whistles in the casino, I want to start reaching for my wallet. I think everybody has a little of that. So getting the emotion out of it and putting the discipline back in. Automation. I'm all about automation. So that's my recommendation. End of day, automation. Do it.
Yeah, and the tools, the trading tools and softwares these days. I know I'm a big Robinhood user. They do a good job of being able to put your orders out there, then getting filled, getting the notifications. So end of day bar closing, and then just using the technology. So I think that's a great way to be involved in the markets if you're a busy individual, and otherwise become a member of Trading Trainer and know exactly what orders and where to place them in what names, so you can continue to be a busy person while making some money from it. So that about rounds out the show for us. AJ, thank you for your time. Thank you, everybody, for tuning in.
Thank you to the veterans out there, right? I think today's Veterans Day, and I just want to thank everybody who has defended us here in the States, around the world. So thank you very much.
We appreciate that. If you've enjoyed the show, hit that like, hit that follow, hit that subscribe button. If you have any questions
about it,
tell your friends, tell your family, tell your pets. And if you have any questions, feel free to email the staff, send a DM, leave something in the comments, and we'll get back to you as soon as you can. AJ, any final words heading into the weekend?
No, just have a nice, happy weekend.
All right, everybody. Thank you for tuning in. We will see you next week. Adios.
Adios.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.